Welcome to Markets Now. I'm Michelle Rook along with Chuck Shelby, Risk Management Commodities. Livestock to the plus side this morning, and grain started off sharply lower, but have started to come back, especially in some of these nearby contracts of corn and soybeans. And Chuck, let's talk about grains first. We've had a big run this week, pushed by war and weather. And, right now we've seen a little bit of profit taking here, and we're kind of overdue for that. But certainly we've come well off the lows, haven't we?
Yeah, it was a tremendous start to the week. The market shot up, and not unexpected here to see profit taken on the end of the week here. It's nice to see though that the market repelled off those early morning lows. So a lot of information, a lot of things going on. Next Sunday night, the weather forecast will be looked at intensely, and it's going to get hot. The question is, how long does it last, and do we get some much needed moisture?
Yeah, I was going to ask you, is it just all profit taking and hedge selling pressure here, or is the market starting to buy into the extended forecast? I know the 8 to 14 day, the 30-day from NOAA looked a little bit wetter yesterday and maybe a little cooler.
Yeah, I think those two forecasts were certainly part of the negativity. Those guys that had jumped in on the market went long, probably looked at this as a long weekend. Moisture, cooler temperatures would be a good thing, but again, that's 10 days away. At this point, those that were maybe week longs or had profit decided to get out and looking at the forecast, and certainly going forward, the month of August is probably going to be one of the major yield determinations. Whether this crop turns out to be a pretty decent crop or could go backwards pretty significantly because of subsoil moistures are just too low in a lot of the areas that the drought monitor map shows.
Yeah, let's talk about that drought monitor yesterday, because I think we still have over half of the country, corn and soybean country, that is in some level of drought. And while we're improving, it's hard to make up all that, isn't it?
Yeah, what it does, I mean, it certainly takes the stress off the plants in areas that have received the moisture. But again, going forward at the critical time of the year, without that subsoil moisture, it's going to really kind of take your yield back. There were some states, Minnesota, that went backwards. So it was a little bit of an improvement, but again, still approximately 50% of the corn belt's in a pretty significant drought.
Yeah. And I mentioned off the top of the show here that war premium was the other part of the equation here this week. The war has escalated. What's your sense right now in terms of will it continue to intensify? And what does this mean for some of our global grain movement and exports?
Well, I think had been hope, and the grain corridor had been open, but when the Russians started intensifying the bombing of these ports, I mean, they've done some major damage. So if you look at some of the photos out that come through some of those terminals, I don't think anything could come out of there, no matter what happens, because of the damage that's being done. So I think the realization that any grain that goes out will have to go up the Danube or out through rail certainly limits the Ukrainians' ability to get it out. And as the war progresses, it's more difficult for Ukrainian farmers to get production going, whether it be fuel, parts for their equipment, and just the loss of life and people that are fighting the war. So to me, this really, the market finally realized that not a lot of good things are going to come out of Ukraine anymore, and the war is headed towards an intensification as we move throughout the rest of the summer.
And so, in your mind, Chuck, how much more war premium do we need to put in these grains?
I think it's a process. I think it just, I think it's more a longer term effect on our grain markets here in the United States. Initially, when you take into their production, it certainly impacts world carryouts. I think eventually USDA is going to have to come in and reduce what comes out of there. So I think it's a more of a supportive factor than what we had a month ago, and I think that is a positive. How high we can go still comes back around to what kind of crop the United States produces, and certainly August weather is going to be critical.
Absolutely. So you're a farmer yourself, and we have farmers that you work with that, see the prices go up. They look attractive maybe versus especially what we saw a month ago. What do you do for marketing right now? Do you do something on the way up? Do you wait? What?
We've had producers who have been fortunate enough to receive some timely rains, or have prospects that are pretty good that are starting to make some cash sales or hedge to rise. Other producers who are less confident in their crop have been more attracted to the put side of the equation. It's kind of each state by state, regions of states, certainly a wide range of where they think their crop is. So it's nice to see the market recover, and I think producers are willing to take advantage of that to a certain degree.
Yeah. Cattle market back up today. We did have a bit of a reversal again yesterday, and I think we've had like 4 key reversals in the last 3 months, but certainly they don't stick in this environment with this tight supply, do they?
No, if you're a technician, you look at this and you've seen those kind of signals, but it's one of those markets, again, that's a fundamental market. So the technicals work for maybe a day or two, but fundamentally, the cattle and feed report today is going to show we're just shrinking that herd. We're not retaining heifers. It's very difficult for a cattle producer to look at the value of that heifer and say, well, I want to put it back and produce a calf that'll get some revenue off 2 years from now. So technicals, they're nice for a day or two, but fundamentals are driving this market.
Yeah. And we did have higher cash trade this week, and obviously that continues to kind of keep pushing this. The other side of the equation is what are we seeing in terms of demand? Exports were better yesterday. Do you get a sense consumers are going to stay with beef?
Yeah, I just felt that consumers are, this summer are really over COVID. I think they're going around and doing those normal summer activities, vacations, going to ball games, anything, county fairs, all those kind of things. So I think the demand side is really strong, and I think it just shows up from the consumers are still willing to spend money on those activities, which include their cookouts, and certainly hamburgers or hot dogs are a big part of that summer. So I just see the demand, at least through summer, remaining very strong.
Yeah, and even exports on the weekly report were better yesterday, and some of that probably has to do with this dollar pulling back off its highs.
Yeah, it's interesting. We certainly need a lower dollar to help, all our export demands. It's good to see China came back to beef market pretty strong. So,
Yeah.
it's a combination of those two. Put those two together, and tight supplies, and we continue to see a strong cattle market.
Yeah. Hogs have had quite the run off the lows. And of course, we had a big update yesterday. Is the lean hog index continuing to push that market? Is that why we're seeing this continued and sustained buying interest, or what is it?
Yeah, you look at the pork industry and the price to the consumers, it's a cheaper product than beef. But again, there's demand there. And I think it goes back to the whole big picture that, consumers are still spending money. We want to get out and do things. And I think the pork complex is, really well supported here. And as we move forward, we could still tack on $2 to $5 on the hog market. And I think that would be a fair value to maybe producers look at doing some hedging again.
Yeah. Discounts in the back months, so you got to wait back there in terms of hedging, though.
Well, I'd probably like to wait on those and see if we can get a higher price to do anything. But the front end's leading the way, so that's always good to see in a market. It means the demand's front end, and it's going to take more as we move into those deferred months to see if we can bring the price up and demand sticks.
Okay. Thanks for joining us. Chuck Shelby, Risk Management Commodities. That is Markets Now.